Good evening, and thank you for attending this evening's Audit Committee on the 24th of February 26. I will begin this evening with apologies for absence and substitutions. I have received apologies from Councillor Martin, who is being substituted for by Councillor Rice. I've had apologies from Councillor Khan, and Councillor Busuttil is joining online. And I'll move on to item 2, which are urgent matters. Are there any urgent matters? Thank you. Are there any declarations of interest? Thank you. Are there any matters to be considered in private? Thank you. And item 5, the minutes. Can we agree these as a correct record of the meeting held on the 3rd of December 26? Thank you. And that brings us to item 6, which is the Treasury review of policy and strategy. Over to you, Bridget.
Okay, thank you. Basically, this report really sets out the Council's detailed Treasury management practices, which is really provides the operational framework in which the Treasury strategy operates. Just to ensure that we're complying with the SIPFA Treasury Management Code of Practice, as well as statutory guidance. So it just really outlines how we manage risk on a day-to-day basis. Unless you've got any questions, that is what this report is.
Thank you, Bridget. Any questions for Bridget? Alan?
Thank you, Chair. Yeah, just a couple of clarifications, if you wouldn't mind, Bridget. Page 14 of the agenda, there's a colour coding described there of creditworthiness. Just be helpful to understand a little bit more about how that works and the significance of those colours in the colour coding. And secondly, a couple of pages further on, there's a reference to in paragraph 9, investments will also be made to counterparties who do not have a credit rating in their own right, who are working in partnership with the council. Just to understand what sort of arrangements we're talking about there. Presumably, those are bodies, organisations that will have been subjected to due diligence in other ways, but just to understand what sort of arrangements we're talking about there. Thank you.
Okay, thanks. The colour coding really is a framework it's still included there because it's a historic thing, basically from when the council invested heavily in lots of UK and international banks pre the global financial crisis. It's a framework that it's operated by our Treasury management advisors, who were then sector, who are now MUFG. So whilst it still remains in the Treasury management practices, it's for in case we do go back to a broader, more ambitious investment counterparty list. So at the moment, we're not really using that framework. We invest in a more conservative list of counterparties. So if that answers that question, then I can move on to the second one, which is basically this is policy lending. And this is where we lend to companies that are sort of arm's length companies, either wholly owned or wholly controlled by the council. So they would usually be, so for example, Broadway Living. Broadway Living has been lent money, as well as Greener Ealing Leisure. So that aspect of the Treasury management practices is to cover those circumstances in which we're lending to affiliated bodies who will not have a credit rating, where that lending is on policy grounds. Secondly, we also lend to local authorities who, on the whole, do not have credit ratings, but we do carry out due diligence on the financial standing of the local authority by looking at a number of publicly available information about the councils before we lend. So that's just covering off where we might not have independent credit ratings. Yeah, those are the answers.
Thank you, Bridget. Any further questions? Councillor Rice.
Thank you, Chair. Can I just ask about on page 51, please, just a bit of clarity on here, about the secondment of senior management. Can I just clarify, is it a case if you have senior management who are perhaps in the finance field who perhaps get a chance to have secondment in treasury management to learn more about it, or are we talking about senior management from completely different departments in the council so they can maybe get to learn a little bit more about what the functions are and while they can have their responsibilities as well? Thank you.
Most of the secondments that we have had have been sort of within finance, so giving finance, other finance staff an opportunity to train in treasury management. Sometimes it's about sort of the dealing process. There's a process where we deal in the wholesale money market on a day-to-day basis. We usually get members of staff from other departments to support this function. So far it has been within the finance department.
Thank you. Any further questions? Bridget, can you talk to us as to when this policy was last reviewed and how often it will be reviewed going forward, please?
This policy is reviewed annually, and actually this is the first time we're bringing it here because it's something that we do generally, and when we get audited, this is one of the documents that they look at. So it is going to be brought here annually and is reviewed on an ongoing basis, but the bringing it here just ensures that we have that transparency in the fact that it's being reviewed.
Thank you, Bridget. That brings us on to item 7, which is the Treasury update. Over to you again.
Report first.
Oh,
yeah.
I do beg your pardon. Can I ask for the report to be noted? Thank you. Thank you. Item 7, Treasury update.
Yes. So this report basically is the general update report on the council's treasury management activity for Q3, and that's to 31st of December 2025. And basically all treasury management activities were carried out within the approved limits and in line with the treasury management strategy. So our priorities remain security of capital, liquidity, and then yield in that order. So we always want to make sure we get the capital back. So nothing really to outline apart from the fact that obviously our balances are coming down because we're spending on capital, and at the moment we're not externally borrowing. So we had about 140 million invested in the debt management office, which is the government. And our returns are largely in line with the benchmark now, largely because we have introduced lending to local authorities who provide slightly higher interest rates. And overall, the Treasury performance remains stable and it's compliant and within budget. And so we continue to focus on managing risk and monitoring the interest rate environment to see when we will be able to externalize debt. So that's me, unless you've got any questions. That's the report.
Thank you, Bridget. Any questions? Councillor Rice.
Thank you, Chair. Just wondering about on page 69, it talks about us investing funds on behalf of the West London Waste Authority. I just wondered, out of interest, are we the only borough doing so, or are all the boroughs who are part of the Waste Authority involved in that? Thank you.
No, we're the only borough that's doing it for the West London Waste Authority. I'd like to say maybe we're the best, so they chose us.
We're the lead authority, presumably finance, are we, with West London Waste?
Yes, I believe so.
Thank you.
Thank you. Any further questions for Bridget? No, thank you. Can I ask the committee to note the Treasury management activities up to 31st of December, please?
No.
Thank you. And And can I ask the committee to note the council's investment balance and the amount invested with the Debt Management Office?
Noted.
Thank you. That moves us on to item 8, which is the Financial Management Code. Over to you, Sophie.
Thank you. I'm asking the committee to note the Financial Management Code self-assessment for 2025-26 and to note the areas for improvement for future years. I would take the report as read. However, I'll point out that the self-assessment concluded that Ealing Council is fully compliant with the Financial Management Code.
Thank you, Sophie. Are there any questions? Alan.
Yeah, thanks. Just a couple of hopefully simple ones, Chair. Both reference page 85, actually. It'd be helpful to hear a little bit from officers about the best value challenge process that is referenced there, that is being rolled out in 26-27. And also in relation to business partner training. I'm aware that in some authorities, finance business partners are kind of managed a little bit separately from the rest of the finance team. So I wondered which particular staff, which particular members of the team would be getting that that business partner training.
Emma.
Yeah, thanks, Alan. So best value challenge. This one, they have already done one evidence-led approach. So the approach they're looking at is that evidence-led, in line with the statutory best value duty, requires those authorities to make those arrangements for continuous improvements on how functions are exercised. The main aims of this approach, it's to identify opportunities to redesign services, reallocate resources, and then deliver credible, deliverable MTFS savings. But it's also looking to safeguard outcomes. Now, work has already been done, and they've looked at a children's areas for best value challenge. That has not yet been reported as concluded. However, the feedback that we received at one of our meetings the other week was that it was very positive, hard work over a tense period of time, but it was quite positive, and the outcomes look like they're good and they're deliverable. And it appears that we have quite a bit of external buy-in from other authorities to come and undertake that best value challenge as well. Second question, receiving business partnering. So training is going to be provided to the whole of the sort of the resource finance team. So that's everyone that sits under the resources finance umbrella. So at the moment they're called accountancy, but they will be our accountants, our finance managers, principal accountants, and it will be across all of the teams as well. So even my technical teams will be involved in having that training, just to make sure that everyone understands that business partnering model. Any other question?
Thanks, Emma. Alan, did you have any further questions?
Yeah, just to check, are there finance business partners in other departments as well, and are they being trained?
So there are business partners within our HR department. I'm unsure about what training they've undertaken to date regarding any business partnering and the models that we work within, but ours will be designed around the SIPFA guidance of business partnering and the model for that.
Sorry, just to clarify that, all of the finance business partners work for you as part of your team?
Yes, they do. Yeah.
Thank you. Any further questions on this item? No, thank you. Can I ask the committee then to note the Financial Management Code self-assessment for 25-26, which is in Appendix 1?
Noted.
Thank you. And to note the areas for improvements for future years also found in Appendix 1.
Noted.
Thank you. That moves us neatly on to item 9, which is the annual audit closing report and statement of accounts. And welcome Suresh, Rajesh and Katie. Over to you.
Thank you, Chair. Good evening to members of the committee. Take the papers as read. Rajesh and Katie will give you a bit more detail, but let me just give you my kind of headlines. Firstly, let me say thank you to Emma and the finance team for the hard work they put in to prepare the accounts and then support the audit throughout. I know we haven't got to where we wanted to get on the council accounts, and I'll just talk about that in a second. But the pension fund, we are proposing an unqualified opinion, which, if you remember last year, we had the qualification because of the disclaimed audits from previous years. And that audit has gone really smoothly, and like I say, the hard work has gone in from both sides. Is there in terms of being able to then issue an unqualified opinion on the pension fund. So thank you for that. On the council side, so we've previously come to you to tell you that obviously because of the previous years disclaimed, we were going to be disclaiming this year, and that's what we're doing. We had planned to try and carry out some work on rebuilding assurance during the year. We haven't been able to do that. Our methodology only got finalised in January, and that's one of the reasons why the council has a little bit struggled with then servicing the audit and some of the delays we referred to, which they haven't mentioned in their report. But in fairness to them, they did divert some resource to help us to try and start rebuilding assurance, and that will still be useful as we move into 25-26. But it's fair to say that did take away, I think, from some of the effort that then could have been on. And hindsight's a great thing, isn't it, really? But that is a contributing factor. The other factor is implementation of the new accounting standard for leases, IFRS 16, and pretty much every audit of a council we've done this year has seen issues, challenges, difficulties councils have had to implement that new accounting standard. Now, you could argue they've had 4 years to get prepared for this, but unfortunately, the complexities of some of the leases that councils hold have meant that either issues have been unearthed with previous accounting in terms of the models that the councils use, or information hasn't been readily available, so certain assumptions have had to be made, hence the reason why there's been delays in the IFRS 16 work. So you'll see in our report, we've listed all the areas of the closing balances we've been able to complete fully, and then a list of others where we said we haven't been able to complete. But just to say, on all those, we did start, and actually some of those were quite close to completion, but we just couldn't finish because of the sort of delays of the knock-on effect of, like I say, some of the resources being diverted onto that rebuilding piece. So it is going to be a disclaimed opinion. We will obviously sit down to have a bit of a wash up in terms of lessons learned, because this is the first year of we've done your audit in a semi-complete way, and I think feedback from the finance team was it's been a while since they've had an audit, so there's lessons learned from both sides in terms of how we can make sure we make improvements for next year. There's a month less next year in terms of the timetable, so the end of January. I'll be sitting down with Emily and Emma in March to go through our methodology to start rebuilding assurance. And my plan is to come to this committee with a clear timeline of when we move from the disclaimed all the way to an unqualified opinion. So we'll try and bring that. I can't remember when your next audit committee is. If it's April, that's probably a bit too early. But if it's later than that, then we can definitely aim to bring that to you then. And then just finally for me, we've included the VFM, but we reported that to your last committee, if you remember. So I wasn't proposed. That's not changed, and I wasn't proposing to go through anything of that. But let me hand over to Rajesh and then Katie, just to touch on some aspects of what we reported.
Sure.
Thank you.
Thanks, Vish. Thanks, Chair. So in terms of the findings and the significant risk, we had reported 4 significant risks in our audit strategy memo. And out of these 4 risks, we have been able to complete work on the 3 significant risks, which is management audit of control, valuation of property, plant and equipment, and valuation of defined benefit pension liability. And we have nothing to report on that, which is positive. As Suresh said earlier regarding the IFRS implementation, so the standard was applicable from 1st April 2024 on the leases and the PFI contracts. So in order to transition to this new standard, the council was required to reclassify the operating leases and finance leases, pass the related adjustments and disclosures in 24-25 accounts. And the council decided to do this transition exercise in-house. It was done by the council's finance team. So when we look at the council leases transition work paper, there were issues, and we requested the finance team to have a real look at the workings, which in itself was a time-consuming exercise, and with the limited capacity of the finance team, it took time. On the PFI contracts, our work involved reviewing the accounting models, and when we reviewed the models, there were again discrepancy, and given the complexities involved, then the council decided to hire an external consultant, and the external consultant submitted their report in end of January, and by that time it was too late for us to complete the work on this specific significant risk. We discussed and agreed with the finance team that we'll backstop our work on this fourth significant risk, which will now take up as part of our rebuilding assurance work. Apart from that, we have raised one internal control weakness this year, which is primarily related to the de minimis level applied by the council on the accrual of income and expenditure. And the second internal control weakness is coming from the previous years, which was related to the review of the user access granted, which the council started, but they only covered the specific staff who only have the approver access, not all the staff members who have the access to the system. And we have given in the summary are adjusted misstatement, the errors which we noted as part of our audit. So all these errors have been adjusted in the areas which we have audited, and we reported that in a summary of adjusted misstatements.
Thank you.
Thanks.
Thanks, Rajesh. So on page 7 of our pension fund audit completion report, we note that the only remaining work to complete is the file closure procedures. These are now underway, and we've completed our pension fund annual report consistency review. In section 4 of our report, which starts on page 12, we outline our work on the significant enhanced risks. So in response to the management override of controls significant risk, we applied our fraud risk criteria to the manual journals and tested 8 journals that were flagged. We also performed a trend analysis on the amount of journals posted in each month, which can be seen on page 12. And we didn't identify any evidence of management override of controls as part of these procedures. We also reported the valuation of level 3 assets and as a significant risk, and level 2 investment assets as an enhanced risk, testing 100% of the population for level 3 assets and 80% of the population value for level 2 assets, finding unadjusted misstatements of 2 million and 1.8 million respectively, which we've outlined on page 21 of our report. So these misstatements, they're due to timing differences between the preparation of the accounts and the fund manager reports, fund manager valuation reports. So, and this is not uncommon across other pension funds. The final matter that I want to draw to your attention is the control recommendation that we've made, which can be seen on page 18 of our report. We've since been provided additional evidence from the finance team to show that these user access reviews did actually take place for the pension fund, and therefore this control recommendation is no longer relevant.
Thank you. Are there any questions on this item? Alan?
Thank you. I mean, you alluded to the capacity issues in the team, and it'd be useful to get officers' comments on this as well. Hearing your explanation that it is obviously an unusual year and a situation that the team has not encountered before. Are there any ongoing issues or any other ongoing concerns for you with the capacity of the team? I think probably that one's more best addressed to officers. But from the auditor's point of view, can you talk a little bit about the implications of having not completed your planned testing and whether that has any knock-on effect on the 25-26 audit? We'll stop things.
try that one first, and then you want to come back to your. So, in terms of there will be an impact, because obviously if we'd have completed all the work on the closing balances, it would have then added to the assurance we take into next year. So we will factor that in. But I need to sit down and go through our detailed methodology with Emma and Emily to work out what that means. It might, like I say, it might mean that we're unable to do everything next year, and we just carry it forward into 26, 27. But if I come up and talk to Emily and Emma, and we'll come back to the committee with a clear timeline. Is that okay?
Okay, so I'll pick up on the capacity of the finance team. So obviously Audit have already explained about the diversion of our resources. So I took the decision to divert some of our resources into rebuilding the assurance work. So with the proofing testing, everything came through, and let's divert that, get that done as part of one team, and then the other side of the team can actually then move forward with the current audit, which is the 24-25 audit, which we're currently looking at. Unfortunately, obviously we were then in a position where the audit firms and MHCRG it was a disagreement of approach on that one, which is obviously what we had updated you within the December audit committee on the delays faced. So yeah, like we said, in hindsight, we took the resources off the current audit work in the hope that we would be rebuilding that. However, that work is not lost. So we've done that work, we've got the files ready, and it's being compiled and completed by somebody who was actually here on those times and during those years as well. So we're quite confident that actually we've done a lot of the work towards where we need to be with what we were provided in autumn. We then subsequently, the same team member who was doing this and compiling the work then went on maternity leave at the beginning of November, which led then to our team all having to act up within their positions. We could have gone out to agency, however we wanted to develop our teams, but there is a little bit of downtime between them taking those acting up positions and then being up to speed within their roles. However, I believe that capacity issues are resolved and we're in a good place, and the team are fully up to speed with their new roles. So moving forward into close down for 25-26 and audit for 25-26, I believe that we're in a good position to be able to support that and move that forward with a well-developed team now. I think that everyone's picked up the work very quickly, so we're quite confident with that moving forward.
Thank you. Alan, you have another question?
I do. Yes, that's helpful, and to understand that the capacity issues are not permanent and ongoing. In relation to the misstatements, it's not the longest list of misstatements that any of us has ever seen, but it's not the shortest either. And one or two in there that raise an eyebrow. Double counting, misstatement of capital receipts. You'll be worried, I guess, about those. Can you, though, for the benefit of the committee, just say a little bit about quality control at the point where the draft statements go to audit, and whether you're planning to make any changes for next year?
Okay, yes, of course. So as we move through the publication towards the draft publication of our accounts at the end of May, as a rule, we build in robust quality assurance checks, so management reviews of working papers, submissions to the accounts and notes to the accounts. So everything does flow through a management review process. Nothing is submitted into the accounts that hasn't been checked and verified and reviewed. We also undertake robust checks during the year. We present balance sheet reconciliation reviews to our financial strategic group quarterly. So this is the 151 officer who will agree any adjustments back or write-offs from those reconciliations, or further investigations as needed. So everything does move through full management review before submitted into the accounts. And obviously all adjusting and closing entries as well are reviewed by management. So prior to submission, comparative data is analysed to make sure that we don't look materially different to the year before. And if we do, we investigate that to make sure that it could just, if it is a one-off exception, or whether we've actually, mapped some things incorrectly. Do you want me to elaborate on the double count? It appears a double count, or
I mean, in the hands of colleagues on the committee. Personally, I'm satisfied with the explanations in the report, and I'm sure you've taken those on board. But I think the other thing was just on whether you're changing anything for next year, or whether you're just going to take this as one of those things.
So no, I don't take them as one of those things ever, certainly with the accounts. However, what we have been doing since we've had, since the backlog had started building and there's been minimal audit work over the years, we have been putting additional checks on our own accounts where we would normally move through a normal management review. We are re-reviewing to making sure that our opening balances are in a good position. Hence why I think there's at least one misstatement in there that's been internally identified. So we're undertaking a lot more checks where the previous auditors had not completed full audits on our accounts. Just, marking your own homework is difficult. However, we need to undertake those just to make sure that we're confident in moving forward. So yes, we're adding further controls and we are doing additional checks. That's not as a result of these misstatements. That is actually something that we've been putting into place over the years as the backlog's been building and the limited audit work's been undertaken.
Sorry, Alan, can you use your mic, sir?
Yeah, sorry, Chair. That internally identified one, that was the capital receipts one, went back to 21-22. That's as a result of the audits not being completed.
It was twofold. So we reopened our pooling return. So that's where it flagged up the creditor that we had left in our account. So yeah, absolutely. And it's from us undertaking those creditor checks that we do every year anyway. However, we are making sure that every return and everything is double checked each time. And it's flagged up from us then double checking our pooling returns to our creditors. Yeah.
Thank you. Any other questions? No, thank you. Okay, can I ask the committee to consider and note the audit Corvis Mazars audit completion reports? Thank you. And to approve the statement of accounts, including the annual governance statement for the London Borough of Ealing and the London Borough of Ealing Pension Fund, and authorise me to sign them. Thank you. Okay. That brings us on to item 10. Do we need the Mazars team? No? Okay, thank you very much for coming along. So that brings us on to item 10, accounting policies report for 25-26. And I believe that's you, Emma.
Thank you, Chair. Okay, so this is to note the accounting policies for the determination of the council statement of accounts for 26-27. Apologies, it does say 25-26 in the report. So this is for the coming year and the accounting policies that we'll use as the basis for our statement of accounts. Just to note that the Code of Practice, Property, Plant and Equipment and the indexation, this is the accounting policies proposed for Ealing, are based on guidance issued by SIPFA with due regard to the local circumstances. There is a change of approach where the indexation requirement applies to the following categories of land and buildings, vehicles, surplus assets, right of use assets measured at fair value. So this is where the council will apply an indexation for a 5-year rolling period, as opposed to having full valuations of our assets. So this is a SIPFA guidance that's changed within the code that allows us to do this. That's the only key change for the coming year. So if anyone has any questions, then do let me know.
Thank you, Emma. Any questions, Alan?
Thank you, Chair. Once again. Yeah, so I mean, I think this comes about. It's been a running sore, hasn't it, with councils, that the valuation of assets each year is a huge task, which makes relatively little difference in terms of the council's decision making or a realistic valuation of those assets in a way that members of the public might recognise. So the change that SIPFA has made is based on I think, a very sensible premise that less work needs to be done in this area. However, revaluing effectively once every 5 years and indexing in between is moving us away from having a sort of a clear idea each year of what assets are worth. Are there any risks associated with that for the council, and how will they be addressed?
Yeah, thank you. So yes, there's always risks with changing policies, especially with guidance. So the main risk that we are trying to mitigate currently is the potential for that subjective interpretation and inconsistencies between authorities and audit approach to this. So this obviously can lead to disputes with auditors or stakeholders over the appropriateness of the valuation methodology. So this is how they come to that indexation of how they're going to increase our assets. So we have engaged early with our valuers and we have brought in the auditors. So we've actually got another local authority who share the same valuer and the same auditors as us. So we collectively have got together to have those conversations to come to an agreed approach in the hope that that will make things a little bit smoother when we get to the final audits of this. So we are progressing well with that one. That's mitigating the main risk that we see. However, there are other risks. Indexation relies on movements in the property market. So there's a risk of misstatements if indices are applied and not robust or appropriate for those assets. Councils hold quite specific assets. I think this has come up on many changes that the government have tried putting in. We hold assets that nobody else really would hold, generally because nobody else would want to hold them. And so finding an indexation for those assets is going to be quite difficult. So I think, again, early engagement, agreed approach, we're going to mitigate the risk of that one. And then after the valuations, or that remaining useful life must be reassessed. So it could have that impact on that annual depreciation, and within 5 years things can change quite considerably, and so we might have quite fluctuations every 5 years on those rolling assets at that point. But like we said, we've got early engagement with our valuers, good discussions with our external auditors as well. So Rajesh and Katie have been part of those conversations. So in doing that, we think we've mitigated most of those risks that we can identify, which, as I said, most risks for any code changes, I think they're similar.
Thank you. Any further questions? Sandeep.
Thank you, Chair. So as well as revaluation, existence of assets. So, you know, ooh, okay, I didn't realise I had to do that. Okay. Yeah, so in terms of revaluation, you know, existence is very important around assets. So, you know, if you're just checking valuations every 5 years, and I guess that's an academic exercise, in terms of movable assets that could be lost, stolen or misplaced, how are you going to be ensuring that? Because that's pretty critical, because there's no point revaluing an asset that doesn't exist.
Yeah, absolutely. So we undertake annual checks. We reach out to services, send them the asset list for each and relevant services, which we're currently doing now for the draft accounts coming forward. I can see Sophie's nodding for the work that she's undertaking. So we reach out to each of those services to confirm that the assets are still in existence. If they can't confirm that, then yes, they should be going out and checking and confirming back to us before we publish those accounts. And obviously we will then write them off accordingly if there is no existence of those assets anymore.
Thank you. Any further questions? No. Okay. Can I ask the committee to note the accounting policies for the council statement of accounts for 26-27?
Noted.
Thank you. And note the implications of changes in the accounting standards for future years.
Noted.
Thank you. Okay, that brings us to item 11, which is the progress report on the work of internal audit and anti-fraud for Q3. And I believe that's being introduced by Michelle.
Thank you. Page 121 of the pack sets out the audit and investigation performance report for the Q3 period. I'll take the report as read, but draw your attention to
key aspects within the report. On page 123, there's progress against the 25-26 audit plan and status for each of the audits in the plan. During the period, we've finalised 4 audits. The audit on the financial systems, on housing rents, and the ICT asset verification all had positive assurance opinion in terms of a reasonable opinion. We provided a limited assurance opinion over the corporate properties audit. Key areas coming out of that audit were around the controls over the maintenance and monitoring of the compliance data, which needed strengthening on the system. Also identified opportunities for using the system more effectively. There's been recent changes to the department structure within that area. And we noted that as a step to address the issues that were identified. Moving on, just to draw your attention to the status of the implementation of the high priority recommendations. Key areas for the committee to note there, and that's on page 128. So the first recommendation in relation to the voids audit, that has now been implemented. The second recommendation on the voids audit is ongoing. Actions are still being undertaken to address that, and we will continue to follow that up. We still await a revised implementation date for the temporary accommodation health and safety recommendation. Normally our reporting on the recommendations is really around the high priority recommendations, but just to draw your attention on page 130, and this had been agreed previously, we would report on audits where there were just medium and low priority recommendations, but where no actions were taken to progress the implementation of those recommendations. So just to draw your attention to the fact that this was the case with the Housing Development Programme report. I'll pass on to Mike for the update on the fraud and investigation side.
Thanks, Michelle. Just a quick update from me, because I think there's some really good achievements by the fraud team. So far, we've identified savings of around 1.1 million, which is a significant achievement. Some of the work includes recovery of properties, things like taking people off the waiting list, and preventing right to buy cases where they're not eligible. Really important work to protect those important assets for those with a genuine need. I also wanted to report the kind of feedback from the National Fraud Initiative. The hub is a relatively new tool that was introduced a couple of years ago that we signed up to, and it's something that's done on top of the biennial match. So we keep looking at data all the way through. Of all the councils that are partaking in that, we were the third highest in terms of outcomes. That doesn't mean we've got the most fraud, it means we're taking it most seriously. And I would say the other two are probably bigger authorities than us. So I think that really reflects the work of the team, and so proud of the work that they've done to get that, and the feedback from the NFI really reflected that. We'll take any questions on either report.
Thank you, Mike. Councillor Johnson.
Yes, thank you. It says, oh, I got it finally. Sorry. I'm going to have to go back now and try and find it. When you were talking about things deferred, health and safety oversight for housing people in temporary accommodation, I think. It was a bit worrying because I thought maybe that might be important because it could do with fire and so on. I'll try and find the exact one. I'm trying to find the page now, sorry.
I think it's
Page
page
129.
129, item 4.
Yes, I was just kind of a bit worried. When is it deferred till? Because something could happen, couldn't it?
So it is in progress, but you're absolutely right to be concerned. We've been asking for a revised implementation date. Essentially, last time when we came to the committee, they have introduced a number of checks. At that time, we'd suggested that there was a question of whether they need to do all the flagell, which is the standard health and safety stuff we talk about, fire, Legionella, gas, and all those, electrical. I'll get there eventually. And which ones they need to do, because some of them are big properties, some of them are actually individual houses. And a kind of meeting was held to discuss those. A number of the key ones, so the gas and electrical ones
And fire.
are kind of significantly in progress. But some of the bigger properties, they need to get assurance on some of the other stuff, and we've said, when will you get that done by? We've not had a date from them. We did raise our concerns with them and said that you would want a date on that. What I'd suggest is, obviously you have an opportunity to call in if people haven't addressed these recommendations, and potentially if they've not addressed it by the next meeting in July, maybe call them in to kind of get a date and get some more information about why they haven't addressed it yet and when they will do so by.
Thank you. So you'll remember, Councillor Johnson, we have had housing in before, but if we as a committee feel like we should have them in again, then we can agree to do
Yes,
that.
I thought I remembered that. Yeah.
Right. Any further questions on this report? No. Okay. Can I ask the committee then to note the report?
Thank you.
Thank you. And that brings us on to the risk management update. Over to you, Mike.
Thank you, Chair. Again, I'll assume the report has been read, but highlighting the key changes to the report since last time. Financial resilience. Obviously, as with all councils, we remain under significant financial pressure, but the risk was reduced by the fact that a 3-year settlement came, and that meant that we got certainty over the level of funding. Up until that point, we'd got it as a significant risk, pretty much as high as it could be, because we didn't know whether that funding was going to increase, decrease, whatever. So we were having to plan for scenarios that might have seen a significant reduction. And now we know, so it's certainty that means there. We still have the demand pressures which were reflected in the risk before, and those continue, but that's meant an overall reduction in the risk, which is just about certainty, really. The cyber risk, we mentioned at the last committee that we'd actually reviewed it, and this just reflects the changes to the kind of risk mitigations since the previous report. Didn't change the risk score, because essentially we're constantly running to keep still, and improving our mitigations and controls, whilst the cyber fraudsters are doing the same. So essentially it's kind of trying to keep up and maintain and mitigate that risk. Risk 7 and 8 I'll essentially keep together, but the one was around the regulatory framework, and obviously we've had the inspection and a relatively positive report, and the other was just directly around the resident harm and housing reporting and positive progress on mitigation. So felt that the risk could be reduced as a result.
Thank you, Mike.
Questions?
Yeah, any questions? Sandy.
Mike, internal audit, or audit being the third line of assurance for Ealing Council, could you just give me an overview of how the third line is set up and how it delivers assurance to the board and the audit committee, just as a reminder? Yeah, thanks. So yeah, I think housing referenced the third line of assurance in here, and I've explained to them that there's kind of 2 lines that they have control of, and in terms of strengthening the third line, that's down to me, and we haven't had any reasons to suggest that we're not operating in line with good practice. So we had a couple of years ago, we had a review against the SIP, the then SIP for standards. We've done an internal review against the global internal audit standards, which we generally meet, and so we kind of have the reassurances on that on our system of controls, and we will go and look at this basically and undertake testing on key risks. So as part of our plan, we will look at this, talk to management about key risks, and we will allocate work within the plan to do that, and we'll go in and look at the mitigations that are suggested to be here to get assurance that some of those are in place and operating as we would expect. So I think when housing refer to third line of assurance in here, it's actually them talking about implementing our recommendations rather than strengthening anything that we would do, if that makes sense. Yeah, thank you.
Thank you. Councillor Rice.
Thank you, Chair. I was actually just interested looking at some of the items that are listed there under Housing and Environment Directorate, looking at issues such as maybe perhaps mould in housing, and it got me thinking about that that we do have instances where there are serious repairs need to be done, such as mould needs to be done in a property, and then maybe the family ends up being moved into a hotel, and then that can obviously be quite expensive for them to live in a hotel for a long period of time with all the expenses there. And also the other big issue we've got at the moment is that because with the situation with after Grenfell, is that so many of our building control professionals are out there dealing with fire safety and ensuring that's in place, that we haven't actually got enough people here in order to deal with our building control issues in terms of just signing off new properties for people to move in. So that creates problems where you're going to have a lot of people in temporary accommodation still waiting to move into the new brilliant housing that we've provided for them, but we can't actually sign off for them yet. So I'm just wondering, how do we manage that situation financially in terms of, because of these factors that are just huge threats to us, how do we manage that in terms of the finances? Because that must be quite, that must be just quite onerous for us to have to deal with those financial ways of managing those situations, because we have to pay out for the temporary accommodation for people to live in hotels. And is there maybe some kind of insurance against that, or is there other ways that we deal with that? Because it can be quite unexpected, really. You still want to really account for that in advance as to what that's going to have an impact. Thank you.
So one of the demand pressures that is included in there is just around cost pressures from homelessness. It's generally, rather than people being moved into temporary accommodation from permanent housing, it's generally homelessness people who we can't house yet in a permanent accommodation. It's a known pressure. It's actually within the first risk, the financial resilience risk, that actually that's a known demand and something not just Ealing but everybody is facing across London. And you've probably seen some of the kind of horror reporting on it, where some councils are really experiencing significant financial pressures. We do have some financial pressures, but not the extent of some authorities. So housing are setting out various things on that. There's a housing demand programme to try and mitigate the kind of initial pressures at the front. There's the work we do on waiting lists and those kind of things. We mentioned in the fraud report, we've gone door knocking on some of the B&Bs that people are accommodated in to make sure they're still there, and those kind of things. And they're trying to basically mitigate the demand and that pressure, and obviously, like you say, doing things like trying to get people back into accommodation. The work we're doing to recover properties is fantastic, because that's 17 properties that are there available to put those homeless people into rather than temporary accommodation. So all of those kind of work and priorities are there to try and manage and mitigate that risk. Does that answer your question?
Thank you. I'm actually just learning an awful lot about how we deal with these situations, and so thank you for the continued update. Thank you.
Thank you. Any further questions on this report? Mike, I've noticed the mitigations on resident safety. Are we considering reviewing those into next year's plan?
Thanks, Chair. Yeah, so I think as we kind of look at the key risks and those being significant risks, we would look to kind of confirm this is, to me, you know, SLT's report of where they're at. We would look to get assurance that those mitigations are working and where they're suggested to be. So when we come to do planning, we will very much be discussing those kind of risks and then looking to develop the program to do some testing to confirm that those controls and give you the assurance that the risk register is working and the mitigations are in place as you'd expect.
Thank you. Any questions? Okay, then I'll ask the audit committee to note the progress on the strategic risk register. Thank you, and to note the risk management policy and recommend this to Cabinet for their approval. Thank you. That concludes the meeting. Do we have a date for the next meeting? No, we don't. Okay, well, thank you, everyone.